Good morning and welcome to the Haven Financial Group radio show. I'm Larry Kallevig, founder and CEO of the Haven Financial Group. We appreciate you listening. Feel free to give us a call anytime, 612-504-8400. Visit us online at havenfinancialgroup.com. All kinds of classes. Kim, good to have Glenn Ramey with us today. We have a lot of insurance discussions to talk about, and we know that's so exciting, but Glenn's going to make it exciting for us today, I think. Good to be with you.
It's great to be with you. Great to have Glenn with us this morning as well. Actually, I think this is a really great subject. It's really interesting, and I think it's something that a lot of folks who are listening to can relate to and are going to be happy to learn some of this information. Considering insurance as a retirement solution, that's what we're talking about this morning. We're going to talk about healthcare and long-term care insurance for retirement. We're going to talk about how life insurance can support your retirement, understanding annuities for your retirement, and then we'll talk about some of those mistakes that you definitely want to avoid when it comes to insurance. You know, Glenn, the interesting thing I think about this subject is that insurance in this day and age, whether we're talking about life insurance, health insurance, it's not your parents' insurance anymore. The insurance industry has changed somewhat, and there are all kinds of new ways to maybe incorporate insurance in your life that can be real positive while you're living and while you're healthy.
Yeah, I wouldn't disagree with all of you. There are many changes that have happened since what your parents had for healthcare. New options to prepare for retirement with, new options within Medicare to choose from, different rules, some of them good for us, some of them helping lower certain costs in areas, some of them raising certain costs in areas. And then on top of that, we're facing a healthcare environment right now that's unique to anything we've seen for a couple of decades of rising healthcare cost, and not in small increments, but lately in significant increments across pretty much every sector of healthcare.
You bet. Let's start with healthcare, shall we? Let's talk a little bit about that. Projected healthcare costs in retirement. One of the things that I think a lot of people believe is that when I get to retirement, everything's going to be cheaper, but that's not necessarily the case when it comes to our healthcare.
No, again, what do the reporting agencies say? The average 65-year-old should expect about $165,000 of medical expenses within retirement. And I want to emphasize excluding, not counting long-term care costs.
Right.
So that is not talking about the nursing home or the home health care or assisted living facility. That is just your regular health insurance and you're out of pocket for it. Mm-hmm. And something I sadly have to tell people with, again, not to bum anybody out, right? We don't get healthier as we age, right? So when we move into retirement, our experience with healthcare kind of changes. We used to barely use it at all, and suddenly we start using it much more than we ever thought we would or could. And that utilization is part of what's going to drive up costs, medication costs, doctoring costs that weren't there prior to retirement that are now there while you're in retirement.
For all those reasons that you've just mentioned, though, it is really important for people to start thinking about their health care, maybe even before that day they step out of, their jobs and they retire. You've got to start planning for it.
Yeah, and one of the ways you can do that is with an employer that might offer a health savings account or an HSA option at your job, right? Start funding pre-tax dollars into a savings account that you can carry with you after employment that can help lower costs or at least eliminate taxation on costs that would be normally taxed for us, like buying our prescriptions, paying for our doctor appointments, certain premiums that we pay within Medicare. If we built up our health savings account prior to retirement, can be money we can then be using tax-free to pay for those things, further saving us in retirement costs.
Sure. Navigating the Medicare system is challenging. We talk about it pretty frequently here. And Glenn, you're a part of that conversation almost every time we do so. We don't necessarily need to get into all the ins and outs because that's something that people should make an appointment at Haven Financial Group and come in and sit down and talk to you or the rest of the experts there about. But an overview of Medicare for people who are, just starting to approach this time when they need to start to think about it. What are some of the key things that people need to think about as you're approaching your retirement stages?
Yeah, so first thing would be timing. When we're going to start it. Are we going to start it right when we're 65 because we don't have other healthcare coming from employment anymore? And if we don't start it at 65, we're going to start facing penalties for not done it at that time? Or are we still with an employer plan that might allow us to delay our Medicare, right? To allow us to not take it when we first turn 65 and take it later when we're ready to leave those employer plan benefits because it's in our best interest to stay on the employer plan instead. And the key caveat there is that your employer has to have at least 20 full-time employees. Their benefits have to be credited credible for Medicare as good or better to allow us to delay our Medicare benefits to stay with the employer plan. But I think understanding the components of Medicare, Part A in the simplest term are inpatient benefits. Part B in the simplest terms are outpatient benefits under Medicare. Part A comes at no cost because we prepaid that one with our taxes. So as long as we or our spouses work 10 years or 40 quarters, no cost to Part A of Medicare. Part B today has a current monthly premium of $202.90 per month, means tested through something called IRMA, an income-related monthly adjusted amount that can happen with your Medicare premiums. And then you're going to go into Advantage plans, supplement plans, standalone prescription drug policies. And one thing I can emphasize or mention here that I think is super important is to get an education on what those things are. To understand what a Medicare Advantage plan is, otherwise referred to as Part C of Medicare, how that works, what are the pros and cons of choosing that option for my health care in comparison to what a Medicare supplement or Medigap policy could be. What are the pros and cons of choosing that option for my health care? Before any consumer is talking this specific company or their plan, I think they need a broad understanding of what these options look like. And we emphasize the importance of hearing that first before making any healthcare decisions, because something people don't often know when they enter into Medicare, especially if they haven't had the conversation, is those Medigap Medicare supplement policies, they're only guaranteed to us in the beginning of starting Medicare. They're only an option when we first start Medicare benefits. After we're on Medicare for a certain period of time, they become underwritten based on our health to get access to. And if we would want that type of insurance to be there when we are sick, we can't necessarily wait until we are to purchase those policies. So understanding those important rules, I think, is one of the key tenets of making good decisions in Medicare. And lastly, understand that working with a professional in this capacity doesn't change your cost. It doesn't add cost to what you're going to pay for your insurance plan. There's no cost to have a consultation with someone more than once about your Medicare options. Brokers like myself are reimbursed, or not reimbursed, but paid by the insurance company to assist people in signing up for Medicare, right? And we're not adding to anyone's cost to be that assistance. And I could argue we're a helpful third party to turn to when you don't know whether something's covered or not, when you don't know how your insurance plan will work in a situation, or when your insurance plan isn't working like it's supposed to, and you want a second opinion outside what your insurance company is telling you what's happening with that bill.
612-504-8400 is how you get hold of the folks there at Haven Financial Group. And if you're someone who is trying to get yourself educated about the issue of Medicare, this is the perfect place to start. 612-504-8400. Glenn Ramey is with us today. He is an insurance expert there at Haven Financial Group. Quickly, we would like to talk a little bit more about long-term care. This is something that scares the daylights, I think, Glenn, out of a lot of people because they think it's just too expensive.
I understand the concern, and I understand why people can view it as expensive, because we're talking about an insurance plan that, depending on how you design it, could be paying $10,000 to $15,000 per month for you to be getting care. And there's a 50% chance that insurance company is likely to have to pay that bill, right? So insurance companies are preparing for that. But I think the most common misunderstanding or misconception is that there's only one way to plan for long-term care. There are many different ways, many different insurance options, including self-funding as an option. We're not saying that someone can't just save enough to pay for it on their own, but there's opportunities to leverage our dollar to get more out of it by planning, by doing something in advance, by looking at these options and understanding them. You might identify one that actually is going to fit your needs and situation, not break the bank in trying to do it, and provide that leverage that, God forbid, this horrible situation occurs to you, that we end up spending time in a nursing home before we pass away, that burden isn't going to be as heavy to you and your family.
You have a statistic about long-term care. Can you share that with our listeners?
Yeah, 70% of us are expected to need some form of help before passing away. That doesn't mean full nursing home care, but some help. 50% of us are expected to spend time in a nursing home. And the average stay is about 3 years. And that average stay cost now is exceeding over $360,000 for a 3-year stay in a long-term care facility.
Right.
Kim, those are big numbers. Those are really big numbers. You should plan accordingly. Let's face it, navigating healthcare options in retirement can be very complicated. And just when you figure it out, they'll change the rules, from Medicare coverage to long-term care strategies. What are your choices? That's where it starts with the education process. So again, have you had these discussions? If not, reach out to us. Start a discussion with Glenn. Get the information necessary. We have classes coming up on this topic, Medicare Made Simple, 2 of them at our education center coming up in September. All of our classes are on our website, havenfinancialgroup.com, and I encourage listeners, go to that, take advantage of these classes. They're well attended, and they truly are informational.
Absolutely. 612-504-8400. Let the folks there at Haven Financial Group know that you heard us here on the radio and you'd like to come in and make an appointment. It's a free consultation. Sit down with Glenn and the rest of the professionals there to talk about your retirement. We're talking about insurance today and how it can enhance your retirement. And when we come back, we're going to talk about how life insurance can support retirement. This is the Haven Financial Group radio show.